Welcome to Property Herald, MOGUL.sg's very own property market insight show. Today, join our Chief Research Officer Nicholas Mak as he dives into the recent April 2023 property cooling measures and how they affect our market. Could you explain briefly what property cooling measures are and why the government implements them?
The property cooling measures is a very loose term given to any sort of policy changes or when the government wants to tighten certain regulations or introduce or increase taxes that with the objective of reducing demand in the housing market in the hope that it could perhaps either reduce prices or slow down the rate of price increase or perhaps to discourage people from over-investing in property market. Take for example, the government increasing the additional buyer's stamp duty, which is a tax that buyers have to pay when they buy private residential properties. And this is one method, one of the tools that the government use to try to so-called cool the property market.
Do you feel that the latest cooling measures were necessary, considering the last curb was less than a year ago?
Well, the latest round of property market cooling measures was implemented at the end of April 2023, and this came roughly about 7 months after the previous round of cooling measures. And typically, one major round of cooling measures could take anything from 6 months to more than a year for the effects to properly filter through the market and have its impact felt. So this round of cooling measures was a bit of a surprise. And furthermore, it's the primary changes in this round of cooling measures is basically the government increased the additional buyer's stamp duty for foreigners and also companies buying private properties, increasing it very sharply from 30% to 60% for foreigners. And this by itself may not be very effective in cooling the property market because it only affects roughly about 10% of the transactions in the market.
Do you think the influence that foreign buyers have on the market is strong enough to warrant this?
The profile of private housing buyers in the Singapore property market has changed throughout the years. Take for example, during the 10 years period between 2001 to 2010, roughly about 10% of the private housing units transacted in the market were bought by foreigners, and another 4.3% of the units were bought through companies. However, in the subsequent 10 years, that's from 2011 to 2020, because the government has started to introduce some cooling measures, the percentage of private homes bought by foreigners has declined to about 8%, while those that were bought using companies' name has reduced to about 1.3%. But in the last 16 months, that is from the implementation of the about 2 rounds of cooling measures ago, at the end of 2021 to today, what we saw was that the percentage of private homes bought by foreigners has declined to 4.3%. That's less than 5%. While the number of private homes bought using companies' name has reduced to just 0.6% because of the very high additional buyer's stamp duty. So what we see is that the government is introducing cooling measures to try to discourage people using companies' name or foreigners from buying the property. But this group of players are already a very small minority in the market. So it is not as effective, these cooling measures is not as effective as if the government were to look at other methods of trying to cool the property market.
So how do you think foreign buyers will react to this drastic increase in ABSD?
Typically, after the government introduced a new round of cooling measures, the players in the property market would pause, study the details of the new regulations, and then decide what to do next. And this round, there's no difference, except that because the Singaporeans and permanent residents are less affected, and the tax falls mainly on the foreigners and those using companies to buy the properties, I think this group of property buyers may actually retreat drastically from the market. Already in the last 16 months, what we saw was that the number of foreigners who are buying private properties in Singapore has fallen to just slightly more than 4%. But I think that this time round, with the ABSD being increased from 30% to 60% for foreign buyers, basically some foreign buyers would find it just too expensive. And they may actually decide to either rent property in Singapore instead of buying, or for some of them who are working and living in Singapore already, they may decide to apply for permanent residency so that when they buy a private property as a Singapore PR, they only need to pay 5% ABSD.
So while they are not in the main group, how do you think these curbs will affect Singaporeans as well as PRs that are looking to be involved in the property market?
While on the surface, this latest round of cooling measures doesn't seem to affect Singaporeans and permanent residents buying their first or their only private property, but I think that this group of buyers will eventually be affected by the cooling measures. This is because after they buy the property, they become property owners, and somewhere down the road, they may want to sell their property. And because this round of cooling measures has raised the ABSD for foreigners so high, it basically discouraged a large number of foreigners from entering the Singapore property market. So the property owners are going to find that they now have a smaller pool of potential buyers to come and view their properties and to make offers for their properties. As a result, Singaporeans and permanent residents who are property owners will be adversely affected by this round of cooling measures.
So in light of these cooling measures, will aspiring investors look for other investment opportunities, or is property still the way to go?
I think for a large number of local residents, that's Singaporeans and permanent residents, they still want to own the homes in which they live. So there will still be property buyers, and also people may want to upgrade their properties from a HDB flat to a private condominiums, or from one location to another location. So yes, we will still see people buying properties, especially for their own stay. As for a form of investments, I believe there will still be people who are keenly interested to do that. Firstly, they may look for ways like, for example, decoupling or using their adult children's name once their children reach the age of 21 to use their children's name to buy properties. Secondly, they may look for other forms of properties, not just residential, but perhaps office, retail, industrial properties as a form of investment properties. And furthermore, they could also look for other non-physical properties, like for example, investing in real estate investment trusts or shares or equities of property developers or property companies. That's another way of investing in real estate. And lastly, in the current high interest rates environment, investors might also want to look at how to diversify their portfolio of not just holding real estate, but also including other forms of assets such as fixed income securities as well as equities. It is often recommended that at least you have some diversification to try to limit the amount of risk in one's portfolio.
Moving on from property buyers, how do you think these changes will affect another major stakeholder in the industry, property developers?
Now, the main business of some property developers is actually to buy the land, build the condominiums or housing development, and to sell it. So this round of cooling measures, especially the high ABSD on foreign buyers, will have adverse impact on developers who are building projects that used to attract many foreign buyers. Take, for example, those that are located in the core central region of District 9, 10, and 11, or in the CBD areas. These developers might have to recalibrate their strategies about how to develop their properties to perhaps to cater more towards local residents. Another strategy some developers might turn to is actually to try to reduce the size of their housing units, because developers are always looking for ways to increase the dollar per square foot price of their projects. because this will directly affect their profit margins. But however, this round of cooling measures would actually make some buyers more price sensitive, and as a result, developers will have to keep the price quantum. Take for example, if that unit affordability for the buyers is at about $2 million, the developer may not be able to increase the price aggressively beyond $2 million. But what they would do is to reduce the size of the unit of that $2 million condo unit so that the per square foot price is higher. And so going forward, we may actually see this reduction in the size of the housing units, which is in a way a form of shrinkflation.
So in wake of these cooling measures, do you foresee the market stabilizing, or do you think we'll see another round of cooling measures before the year ends or in relative short term?
In the past 13 years, the government has implemented more than 10 rounds of cooling measures. And every time after one round of cooling measures, the market may so-called stabilize in terms of the transaction volume may fall for 3 to 9 months before it finds a bottom, and the players will eventually go back to business as usual. In other words, prices and transaction volume may rise again, especially if there is fundamental demands and the market is in a very buoyant mood. So perhaps the government has to look for a different method to try to stabilize the market instead of just raising ABSD. One way perhaps is to stipulate the size of 1-bedroom unit, 2-bedroom unit, and especially the family size 3 and 4-bedroom units to prevent developers from reducing the size of these housing units. This will also benefit the community at large. That means people who need these housing units, especially for families, they will find that the bedrooms, the size of the units are of more reasonable, humane size instead of, for example, we have found that the 3-bedroom units has reduced from 20 years ago. It was roughly about 1,200 to 1,300 square feet. Today, some of these 3-bedroom family size units is about 900 to 1,000 square feet. So they have actually shrunk in size. So if the government were to state by law that the family size unit cannot be smaller than a certain size, the developers would also not be able to raise the price in terms of dollar per square foot too aggressively. And this will also have a due benefit of slowing down the rate of property price increase.
Thank you so much for tuning into this episode of Property Herald. If you like what you just saw, be sure to like, subscribe, and follow our links in the description below. For more data stories, insights, and much more, visit our website at www.mogul.sg. Thank you and see you next time.